This is an uncovered Japan company research report on Torex Semiconductor, ticker 6616. Torex is Japan's only listed pure-play specialist in ultra-small, ultra-low-power power management ICs, with its own domestic wafer fab through Fenatech. The investment question is whether a deeply cyclical business can turn a recovery into durable, higher-margin growth. At the report's market data date, Torex had a market value of roughly 26.5 billion yen. It traded on about 17.3 times forward earnings and 1.29 times book value, with a 2.46% dividend yield. Those figures are neither an obvious bargain nor a growth premium. They make the trajectory of margins, cash generation, and execution especially important. Power management ICs regulate the electricity that other electronics use. Torex focuses on applications where small size and low power consumption matter: industrial equipment, automotive systems, medical devices, and wearables. The company also owns Fenatech, a domestic wafer fab. That vertical integration can capture value from chip design through wafer production, but it also adds fixed costs and operating leverage. The 5-year record shows why Torex must be analyzed as a cyclical. Revenue fell from a 32.0 billion yen peak in fiscal 2023 to 24.0 billion yen in fiscal 2025. The operating margin moved even more dramatically, from 12.4% to a 2.6% loss. Fiscal 2026 brought revenue back to 25.1 billion yen and operating profit to 1.09 billion yen, a 4.3% margin. The recovery is real. The application mix is led by industrial equipment at 38.7% of parent company sales in fiscal 2026. Medical is much smaller, but was the fastest growing category, up 57.7% in the same year. Automotive, meanwhile, declined. That mix matters because the growth story is not one single end market bet. It depends on industrial recovery, while the company tries to build exposure to newer, higher growth applications. Accounting earnings were volatile, but operating cash flow remained positive through the loss year. Free cash flow was negative, while capital expenditure was elevated, then turned positive at 770 million yen in fiscal 2026. That does not remove the cyclicality, but it suggests the recent recovery has some cash support, and that the capital expenditure burden may be easing. Torex is specialized rather than broad. The report highlights a differentiated coil-integrated product family and a focus on ultra-small, ultra-low power chips. Fenatech lets the group combine a fabless design mindset with in-house foundry capability. That can be valuable when volumes recover, but the same structure creates high fixed costs. Investors therefore need to distinguish a structural advantage from simply a more leveraged version of the semiconductor cycle. Management's fiscal 2026 to 2030 plan targets revenue growth from roughly 25 billion yen toward 36 billion yen, or around 8% annually. The more demanding part is the operating margin target of 12.5%, nearly 3 times the fiscal 2026 level. The pillars include physical AI and robotics, data centers, EVs and healthcare, alongside compound semiconductor optionality at Fenatech. Those are plausible tailwinds, but the earnings delivery remains the key test. On capital returns, Torex uses a roughly 3% dividend on equity policy. The dividend held at 56 yen, even through a loss-making year, which is meaningful evidence of commitment, although the 2.46% yield trails some larger peers. The governance picture is mixed. Payouts have been resilient, while the report flags a history of missed earnings guidance. That makes monitoring actual progress more important than relying on an ambitious plan. At around 17.3 times forward earnings, Torex sits above the report's 14 times historical average, although PE ratios are inherently unstable around a cycle trough, and fiscal 2025 had a loss. The shares are modestly cheaper than the electronics sector, and clearly cheaper than some semiconductor peers. But that discount reflects real uncertainty: cyclicality, impairment history, geopolitical exposure, and very limited liquidity in a small-cap name. The report's scenarios make the uncertainty explicit. Against the reference price of 2,289 yen, the 3-year bear case is 1,680 yen. The base case is 4,140 yen, and the bull case is 7,700 yen. These are author estimates, not price targets or predictions. Their value is to show the sensitivity of the outcome to a recovery in earnings and margins. The widest risk is not the arithmetic. It is whether the plan is executed. Torex combines a real niche in power management ICs with domestic fab capability and exposure to several long-term electronics themes. The cyclical trough appears to be behind it, and cash flow has improved. But the expected reward is paired with execution risk, thin liquidity, and a plan that requires a major margin step-up. For investors, the sensible focus is the evidence each quarter: revenue quality, margins, cash conversion, and management's forecasting discipline. For a much deeper look, visit the free deep dives at uncoverjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.